We are going to go ahead and record this session, and we're going to just have to recognize that we have to give each other some grace today. So I'm sorry again for the tardiness of getting started here. We even started a little early to try and test things out and didn't foresee this sort of a glitch. So good afternoon now. I'm Erin Taylor. I'm the Executive Director of the Wyoming Association of Community College Trustees. And we're here today with some really special guests, some folks who I've worked with for a long, long time and really proud to call my friends as well, to talk about property taxes. As you all know, as trustees, we have had lots of conversations about property tax relief. Many of you live and work in communities where you've seen significantly increasing valuations and a lot of outcry from the public in that space. The legislature has been under tremendous pressure to provide some sort of relief. And the last few legislative sessions, we definitely have seen an attention to that sort of detail, but we're not done. And so that's what I wanted to provide for you today, is an opportunity to learn a little bit more, because we all know mill levies impact community colleges. And you as trustees, I'm sure, might bump into people on your day-to-day, as you go about your day-to-day, when you might need to have a conversation about these property tax issues and the whole concept of relief. What does that mean? And what does it mean to the entities that utilize those taxes? So I invited Director Brenda Henson of the Department of Revenue to be here today to give us kind of that brief overview of our property taxes and our system. And then also some input from Executive Director Ashley Harpstreith of the Wyoming Taxpayers Association, an entity that has provided a tremendous amount of value in this whole conversation and really educating people on how our tax system is structured, how we compare to other states, how mill levies work, etc. So that is how I will just tee it up. So folks and trustees and folks on the call, we'll have an active chat. I think both presenters are going to be pretty brief. We really want to have a conversation and be able to answer the questions that you have. And so keep track of them, throw them up into the chat, whatever works for you. I'll try and make sure I can monitor the questions that are asked up there. And we'll leave plenty of room for dialogue as well. So with that, I'm going to cross my fingers that Director Henson was able to join in a different way through her voice, and I'll hopefully share her slides. Brenda, are you there?
Can you hear me now?
Okay. I can hear you, Brenda.
Okay. I can speak. I do, so apologize. Unsure. I think sometimes it's the changing from GoToMeetings to Zoom to some of these different formats. But I am really excited to be with the trustees today, and hopefully the information that I'm going to share will have questions. I encourage you as we go through this information. And Erin, did you want me to go through the slides first, or were you going to have Ashley go first?
Why don't you go ahead, Brenda? I have you teed up, and okay. I can just help you walk through.
Fantastic. Well, again, thank you all so much. Thank you for your patience. I recognize it's already 12:15. So I've only got 16 slides. Let's just talk about property taxes. You know, property tax is such a complicated subject, but it's one that affects every single person, whether you have children in school, whether you need fire protection. But property taxes and other taxes are how we as citizens pool our money to pay for infrastructure, services, those things that we could not afford on our own. So with that, we'll talk a little bit about who pays property taxes. And basically, if you own property, you pay property taxes. And that means if you are a homeowner, a commercial business owner, you have an industrial property, data centers, look looking at oil field equipment, coal mining equipment. Basically, everything is taxable in Wyoming unless it's specifically exempted. So let's just talk about those who have the highest assessed values in the state of Wyoming. And Erin, I can't tell, it looks like you're still on the first slide from my perspective. I don't know what everyone else is seeing. Yeah, I think you're, there we go.
Trying to get it to advance. So I'm not sure. Good Lord. I'll keep working on it, Brenda. Keep talking. There we go.
Okay, there we go. So if we go to slide number 4.
Yep, we're there.
Okay, I can't see it. It looks like you're still on the first screen. So on slide number 4, if you're able to see it, you'll see what I've done is I've taken all of the various categories of property, and then I've calculated the amount of assessed value, and this is 2023, and it's the values statewide. And you'll see that residential is right there at the top. 28.895% of our total assessed value in the state of Wyoming in 2023 came from residential properties. So if you go on further down that list, there we go, Erin, thank you so much. All of the items that are highlighted in blue, that is mineral production. That's not any equipment, not any land, that's the actual severed mineral. So we see that in second, you've got oil production in Wyoming in 2023 was 22.5% of our total assessed value. If you were to add up all of the highlighted items, you'll find that over $17 billion of assessed value, or over 50% of our assessed value, was from mineral production statewide. Now, why this is important is you're representing your community colleges. Just because 50% of the assessed value statewide is related to mineral production, we're going to look at some slides later that speak to your specific community colleges and how the makeup of your assessed value is different. So we look at that 28.895% in residential property values. Then you'll see how it goes down industrial, commercial, railroads. And then the one thing to note, there's only one entity that collects property tax on every assessed dollar statewide, and that's the 12 mills that goes to the school foundation. Other than that, every other taxing entity has a different makeup of their assessed value. So let's talk about Wyoming's historical assessed values. So the next slide, you'll see that, boy, we've been on a roller coaster. We always have, because we have minerals included in our assessed value, and they're very volatile. And so in 2023, we saw a record high assessed value of $34 billion plus. That was up from an assessed value in 2022 of $26.5 billion. Why that's important is we saw values in minerals crater for the 2021 assessment year. So if we go back in history and you look at 2022's value of $26.5 billion, back in 2015, we had that same similar assessed value statewide. So how do taxing entities cope budgeting when you see these fluctuations of mineral assessed value? If we turn to slide number 6, you're going to see where in 2015, the assessed value for minerals was over 61% of our total assessed value. 61%. That means statewide, that was at risk. So on slide number 6, you'll see in 2023, the assessed value was 50.75% mineral production. And these are really important, but it's also important to know that that mineral production, 78% of that mineral production was in 4 counties. Campbell County, Sweetwater County, Converse County, and Carbon County. So as we move on, we're going to talk about taxing entities. And on slide would be 6, that's the rest of the story where it talks about the mineral assessed value. And then when we go to the next slide, we talk about the taxing entities across the state. So in 2024, there were 608 taxing authorities. The next slide shows the various breakdowns. So when we talk about taxing authorities, we have cities and towns, 99 of those, obviously 8 community college districts, but 34 conservation districts across the state. And you can see going down the list, the largest number are improvement and service districts. Now, I mentioned how taxes are how we as citizens pool our resources to pay for things we can't afford on our own. That's exactly what an improvement and service district is. That's where a group of property owners that, for example, might want asphalt roads. And so they vote to form an improvement district. They borrow money to pave their roads, and then they, through property taxes, pay the principal and interest for those road, for the loan to buy the asphalt road and have it installed. Then when that loan is paid in full, there's no mill levy then. But it's important to note that every one of those districts outside of cities and towns, the countywide 23 counties, everything else was created by a group of property owners coming together and forming those taxing authorities. And you'll see on the left-hand side of this slide all of the different services that we get from property taxes, whether it be education, K through 12, the community colleges are funded with property tax, law enforcement, fire protection, libraries, airports, cemeteries, animal control, landfills, senior citizen centers. There's just a lot of things that property tax is that funding source for. If we look at the major breakdown in the next slide, you'll see that counties in 2023 received 17.48% of the total property taxes that were collected. The cities and towns, 1.84% went to cities and towns. Counties are maxed out at, they can only levy 12 mills. Cities and towns are limited by 8 mills. Special districts, that's all those other districts that we saw in that prior slide. Education, now that's 72.84%. Now that does include the 12 mills for the school foundation, the 25 mills that each school district levies. There's also the 6 mills for the county fund. And then if there's any BOCES that is approved and collected. And then of course it does include community colleges, any bonds that they have levied. But out of total property taxes, that 72.84% that went to education, you can take that times that 2.199, and that's the lion's share of the taxes. But I spoke a minute ago about how every taxing entity's tax base is different. On the next slide, we're going to look at the differences between the counties. So on the left-hand side, what I've done is I've shown what percentage of assessed value is from residential for each county. And then on the right-hand side, I've chosen their county seat and what percent of assessed value is residential for them. So let's just look at Campbell County. Of course, that you've got a community college, Campbell County, 6.57% of Campbell County's assessed value is residential. But for the town of Gillette, when they're looking at their 8 mills, over 63% of their assessed value is related to residential. As we go down the list, for those that have community colleges in them, Fremont County, 34%, Lander, 72%. Laramie County, about 41.5% of their assessed value is residential. But let's go down that list. Park County, about 49%. Sheridan County, 74% of their assessed value is residential. So Sweetwater County, 10.48. So when we talk about this roller coaster that we've got with values related to minerals, it's not the case in all of the community college districts. Some of them are very dependent on residential. And through the years, we see residential being fairly stable. Same is said of commercial, industrial, agricultural. They just have a upward click each year if we were to look at it historically. But for those mineral counties, it's a real challenge. I've got the map, of course, where, and you all know where your community college districts are. And then what I've done is look at 2023 and the funding on slide 12 related to those 8 community college districts. Now, what's interesting, as you know, Campbell County, the Gillette Community College District was new a couple of years ago. But what's interesting is Campbell County levied 2.5 mils for 2023. And you'll see the rest of the colleges, the 4 mils in that left-hand column. So Campbell County's 2.5 mils, because of their assessed value, generates more than 4 mils in any of the other community college districts. So that's the challenge that each of the districts have, is even if they take their full 4, their additional 1 mil voter approved, the BOCES, and you see that you've got 4 community colleges that have gone to the voters and borrowed money for construction, and that's that $6.5 million in that second to right-hand column there. And then, of course, the total for the 8 community colleges in 2023 was a little over $78 million. The next couple of slides gives you a historical perspective of what those levies have been doing. So 2022, that was the first year that Campbell County, Gillette levied. But what I did there is I went ahead and subtracted out the Campbell County so that you could see, excluding Campbell County, that total taxes collected was just a little shy of 45 million. And in 2021, 35 million. The next slide shows the next 3 years. So the next slide, 39.5 million, 39.5 million, 35, almost 36 million. So really for the other 7 community colleges, when you look at just the 4 and the 1, now these slides don't include any bond that was money borrowed, but very stable revenue source. And I think that that is truly indicative of the fact that the majority of the counties outside of Campbell County, they don't have a large mineral tax base. It's mainly those all other categories, which are industrial, residential, commercial, agricultural. The next slide, I'm almost through with the slides here. I thought just a quick glance that showed that property tax base for each of the community colleges for 2023. So you can go right down through Fremont County, about 46% mineral production, but really it's, you know, Sweetwater's got 60%, but Campbell's at that 81. But the rest of the districts, as you look at your budgets, this is something that I know that you have to take into consideration. The other thing that I haven't gone into detail with, 2 years ago, how we collect ad valorem mineral production taxes changed. And I'm not going to go into a lot of detail, but for those of you monitoring the cash flow for your district, you'll know that you're receiving property tax dollars for mineral production significantly sooner than it used to be. That's because of the estimated amounts that we're collecting based on a prior year mill levy and distributing that to the county treasurers, and they distribute that on to all of the taxing entities, including the community colleges. And so happy to answer any questions that you may have on that. But with that, Erin, that's the information that I had gathered for the trustees. I hope they found it informational.
Brenda, thank you for that. And that worked perfectly given all of the wonderful challenges that we had. My goodness. And my computer wouldn't let me advance the slide when I had it in presentation form. So, oh my goodness, thank you so much for your grace today, everybody. We got there. Brenda, thank you for that information. I will tell you what I loved are those last few slides that really focused on the steady nature of those residential values for those counties. That is a big conversation piece when you talk about granting relief for residential taxpayers, given that that is the most stable part and the most the part that everyone can count on the most, right? It's less volatile in that space. So when trustees are building and colleges are building their budgets, granting relief in that space is going to be something that they need to pay attention to.
Absolutely, Erin, and we're not going to talk a lot about property tax relief and that the legislation that was passed this past session. But one thing I would say is the property tax refund program, that doesn't impact the budgets of the taxing entities. The property tax, the 4% cap that basically provides an exemption for all homeowners on any value that went up in excess of 4% from the prior assessed value, that is not backfilled. And so taxing entities all across the state are going to see shortfalls in the 2024 tax year, which ultimately is fiscal year 2025, because that's when those dollars are collected. So you're going to see an impact on that. And by approximately, July, August, we'll be able to tell taxing entities exactly how much assessed value was exempted due to that exemption. Now, for 2025, that exemption expands to residential land as well. And so that's an impact. The other piece that we'll need to be looking at in 2025 is the long-term homeowners exemption. Does not have a backfill. So any exemptions that are granted related to the long-term homeowners, and that's those property owners 65 years old and have paid property taxes for at least 25 years, that's going to be an impact to all the taxing entities. The impact's going to be different for all of the entities depending on the properties that are within the boundaries of those, but it's just something that as we move forward, it's going to impact those tax bases.
Perfect. You're absolutely right. And that's a great segue into what Ashley's here to talk to us about. So Brenda, if you can hang on, if there's more questions at the end, I guarantee there will be. Let's hear from Ashley a little bit, because she's got more to share on exactly that legislative space. And I'm sure she's got a great crystal ball that's going to tell us what's more to come this year in the interim. And then she's got something that's really exciting, I know, to share with us in terms of what taxpayers has been working on. So Ashley, the floor is yours.
Perfect. Well, thank you, Erin, for having me. It's fun to see a lot of familiar faces on this call or Zoom. And it's always a pleasure to co-present with the legend of Director Henson. She is definitely the tax guru. What she said is so important, and I have that in the beginning of my slides. I will certainly share and pass these on through Erin so you can look at them closer. I'm going to graze very quickly in about 2 minutes over my presentation to get to the policy considerations. But for those of you who aren't familiar with who we are, since 1937, WTA has advocated for sound tax policy for a healthy Wyoming economy. We are not pro-tax, we're not anti-tax. We are just a diverse organization, from large companies to family businesses to individuals to legislators to co-ops to large utilities, private citizens, you name it, as part of our group. The way we get to our policy decisions are our cornerstones of taxation. Is it justified? Is it equitable? Is it stable? Is it transparent? And this is all due in part because of Tax Reform 2000, when we studied the tax structure and realized, as you saw from those revenues, we are dependent on a boom and bust system of severance tax and property tax from the minerals industry and their sales tax. And you can learn more about that through all these links I'm going to send on. Director Henson just hit on property tax and where it comes from and where it goes. You can see where it is on the whole structure. One of the things we've been hammering over and over recently with the Joint Revenue Committee, even as they implemented 4 major changes to the residential property tax code, we still remain number 2 for the lowest effective individual tax burden for the year 2024 at 7.5%, according to the Tax Foundation. If you want to look at how we compare, you can see the 3 main taxes: sales, income, property. Of course, we don't have an income tax, but these, again, you can go back through and look and get to your own conclusions at. This just summarizes the conversation or the presentation that Director Henson showed you earlier of where all the property tax comes from, and you can see how dependent we are on minerals. And one of the things also is not just the mineral production, but they also own industrial locally, and state assessed plus commercial property is mixed in there as well. And then we talked about how it's used. You can see where it went to community colleges. We already hammered on that. And then there's some sales tax information I'm going to glaze over. But what's the most important right now, I think, for the rest of the time is understanding how this is going to change with the 4 pieces of legislation that passed the 24 budget session. There was a 5th the governor vetoed, and we'll just get that cleared off real quick. It was a homeowner's tax exemption. It would have been a 2-year exemption, 25% off everybody's residential property tax up to the first $2 million of fair market value. That would have cost over $400 million. It did have a backfill, but there was concern what happens after that 2-year exemption. What does that look like? And, you know, obviously we don't have a crystal ball. It depends on what's going on with the minerals industry, if we could afford to keep giving that exemption. But if you go to the top, House Bill 3, or now House Enrolled Act 44, property tax exemption for long-term homeowners, they did pass, and that implements a 50% exemption on assessed value for those that are 65 years or older and have paid property taxes, into Wyoming for at least 25 years. So there were some metrics around how you were able to qualify. It is effective January 1, 2025. So residents are not seeing that yet on their tax bills, but we'll see it the next year. Per Director Henson's remarks, there is no backfill. This does impact your budget, school foundation program, and local governments. And you can see what that comes at a cost at in the fiscal years below. House Bill 4, property tax refund. This is an assertive program that you have to apply for and qualify, but it did expand by 3 income tiers. The governor did exercise his pen and vetoed some of the expansion in it, but it's still pretty expansive. And I could certainly let Director Henson comment on the types of checks they're cutting, but she said, you know, anywhere from $1,000 plus in refunds, that there are certain applicants eligible for it. There's an administrative impact, but like she'd said, it's not absent an appropriation because they put it into the budget. So you can see those fiscal impacts on top of the $20 million they put in there, I think is how I did that. House Bill 45, the property tax exemption, the residential structures land, even though it's an exemption, it acts as a cap. So anything that grows past 4% in assessed value will be capped, and that's immediately effective. So people are seeing that on their bills that just came out. You can see the cost before. Below, there is no backfill. This goes on forever. So this is going to be something that they're going to have to decide how to backfill these costs, or you know, local entities such as yourself are going to have to figure out that missing revenue and growth. Senate File 89, Veterans Ad Valorem exemption amount. This is probably the smallest of any of the changes they made. That went up from assessed value of an exemption of $3,000 to $6,000. This is also assertive, so those that are eligible have to apply. The fiscal note is not as major of a change. It does have an appropriation to it. I think those are about due right now, Brenda, for those that want to apply. So I don't know, Aaron, before I go to the Cowboy family, if you wanted to open it up for any questions for Brenda or myself on the administration and the potential impacts of these 4 major changes that Brenda will tell you that haven't happened in 3 decades. We haven't seen anything like this hit the residential property tax code.
Yeah, I think this would be a great space to pause and allow folks to answer some questions. And just go ahead and chime in, because I can't see everybody right now. I think I'll tee it up with one question, because Ashley, you said it, we haven't seen reform like this for decades. And so but this question might be more for you, Brenda, in terms of administration, what are the biggest hurdles that you have on your end with your team, with your people, maybe your systems? What are the biggest hurdles that you have with implementing this sort of these sort of bills that we're seeing?
Well, thank you, Erin. There is a pretty heavy lift out there. It's stated, I've been administering property taxes specifically since the late 80s, since we went to fair market value as a basis for property taxation. And I can honestly say there has not been any tax relief specific to residential other than the property tax refund program and the veterans exemption. Other than that, nothing was available for property owners. So when we look at the property tax refund program, we anticipated that with the increase to 145% of median household income statewide, that program would expand from, we had about 9,500 applications last year for 2022 refunds. The applications that we're taking now are for refunds of 2023 property taxes. The deadline for paying the second half of those just passed on May 10th. So we have a lot of people now that will be applying. I can tell you that we had about 4,000 applications currently, and we anticipate we'll have about 12,000 total. We don't know for sure, obviously, but the ability to get 75% of your property tax bill refunded up to 1/2 of the median residential property tax bill for the county where your property is located, there's some substantial refunds available there. And I think what's important about the property tax refund program, yes, it does have income criteria. Yes, it has an asset test. Yes, you have to have lived here for 5 years. But then if you qualify, the relief is significant. It's not just a few dollars, it's significant tax relief. And you're right, in Laramie County, for example, the property tax refund, 1/2 of the median is $1,000. In Teton County, 1/2 of the median is over $5,000. The median residential property tax bill in Teton County is over $11,000. So these are all important things to know. So just want to remind everyone, the application deadline is June 3rd. It's the first Monday in June every year. So June 3rd is that deadline, and there's no exception on that. So please tell your friends, neighbors, because we're finding that there are a lot more people that qualify this year. It's really hitting that middle income group. The other piece that we're really working diligently on is our rules. So for both House Enrolled Act 52, the 4% cap, we had to promulgate rules, and also for the long-term homeowners, we're wanting to get those rules and the application form ready to go so that by fall, those will be available in your local county treasurer, county assessor offices. It is the county assessor that property owners will need to apply for the long-term homeowners exemption. The deadline for that will be the 4th Monday in May 2025. But we want to make sure and get the information out there as soon as possible. And there's no income criteria on that program. So we believe that approximately 6,500 residents in Wyoming would qualify for that program, but we'll be interested to see how that turns out. As far as the veterans exemption amount, again, that applies for next year, but that does take that dollar amount, the tax dollars for the veterans, and we had about over 19,000 veterans that received the veterans exemption last year, but it would go from about $220 off your taxes to $440, depending on the mill levy where your property is located. So those are all significant expansion of property tax relief. And as we know, Revenue Committee is meeting again the end of this month, and they're continuing to discuss property tax relief and structure, and just encourage everyone to participate and provide feedback on that discussion.
Yeah, and Brenda, I wanted to plug that, Aaron as well. So if you're not able to make it in Casper, you can certainly always stream it and watch it back at any time. But one of the things that I think is going to be super interesting is that they'll review, of course, all the property tax bills that they've been looking at. But they're bringing in Jared Walczak, who is with Tax Foundation and someone we use constantly for information. And he did a recent podcast grappling with webinar grappling with the new property tax revolt. We're not the only state where assessments have gone up and are having a hard time of figuring out what is a balanced approach with property tax, because usually it is one of the most stable taxes there is to provide services to the local citizens. And so he's going to talk about national trends and specifically Wyoming's and how it's unique to us because we are so dependent on the minerals industry and the cautionary tale of, don't cut your nose to spite your face, and the way you shape your residential property tax, how important it will be for us moving forward. Because there are a lot of elected officials that are currently elected, and there are some that are going to try to run on eliminating property tax and going to a sales tax system. While that might work in some states, it's super hard on ours, and there will be a shift in burden because we only, as individuals, pay sales tax and property tax. So putting all the eggs in one basket is a little alarming. And what does it look like for the services such as, community college districts? How does that leave you whole? So I think that's going to be a fantastic discussion at the end of Tuesday, May 28th.
Thank you for that. That is perfect. And I like to remind legislators this, but our trustees, most of them are elected by a greater margin than most of our legislative districts, right? And so you trustees have a tremendous amount of influence in your communities, as you know. I know maybe you don't want to get involved in the tax conversations, but it's so important and your voice matters. And so that's why we're so excited to provide you these resources. Great ideas from Brenda in terms of the property tax relief for your constituents as well, and then opportunity to participate in upcoming conversations in that legislative space. And I'm excited to hear from Jared's conversation. Ashley, thank you for that. With some remaining time, I don't want to forget that, Ashley, you've got something really important to share with us. So before we run out of time, I want to make sure you get some time to share the Cowboy family with us.
Yeah, so we are really excited to share this new tool, and as elected officials in helping your public understand where their tax dollars go, that is the whole purpose of this report, to provide a deep dive into the average state taxes Wyoming citizens pay and the benefit of services they receive. We have mimicked this off of other similar state reports, but those reports only focused on the taxes paid, but not the services received. And so we want to really highlight what is available to the average Cowboy family. And so you can use this interactive calculator to figure out what your taxes are, and then it will spit out what you pay in and what you receive out. Now, this is not perfect. I'm going to put a disclaimer out there. You might have 2 homes. You might have 5 vehicles. I know Aaron has a lot of teenagers, so I only have 2 vehicles on here, so this wouldn't quite capture your family. But you can get the average and the idea. Along here on the left side, you can see the Cowboy family report. And this gives you the overview where we set those variables up for the average family using the mean information of all 23 counties, and included those outliers because our state is so vastly different between Niobrara to Teton counties and home prices. Additionally, I just want to make sure that we did not make this up. We use data from the U.S. Census Bureau, U.S. Bureau of Labor Statistics, the Tax Foundation, and numerous Wyoming state entities. We did not include federal funds, but we did have excellent advisors. We used Dr. Godby from University of Wyoming Department of Economics, Dr. Winlin Liu from the Wyoming Economic Analysis Division, and then the retired Director of Department of Revenue, former Director Dan Noble. And they were all instrumental in helping us decide that methodology of this project and helping us overcome the roadblocks we encountered throughout the project. But for illustrative purposes and for the rest of the report, we used a family of 4 with the variables of making 125,000 and having 2 cars. They were sinners because we go into excise tax. And so, and I'll just scroll through that very briefly, but you can see the average that they put in was $4,429.08, where they got 61,000 plus out in services. The other big piece we wanted to highlight in the report is who pays the remainder of that. So you can see the mineral portion and where we are very hamstrung by the boom and bust nature, and then the non-mineral, which also includes investments, which we hope to on version 2 to follow to drill down on. You can see all the taxes that they paid in. We just talked about house derived and where it goes. Same with sales tax, fuel tax, excise tax. I know most people aren't smoking and drinking like they used to, but it is a big piece of our tax code. So we wanted to throw it in there. And then more importantly is the services received. And this is where you guys come in, showing what the bang is for their buck. Obviously, the biggest piece is the K-12 education overview. Even if you don't have kids in the system, I know I'm talking to a group that loves education, so this isn't a hard sell, but educating our future, even if you don't have children in the system anymore. Overview of state services, and I believe, yep, this is where Community College Association lies. Department of Health, which is a huge resource, use of resources, special districts, city and town services, county services. And then at the end, we talk about how you derive those mill levies. What is mandatory? What's the limits on them? And then using a sample calculation, showing that minerals are, valued at 100%. That's their rate. Commercial and industrial is 11, or industrial is 11.5, and then all other property, real and personal is at 9.5. So you take that assessed value, and we used a $200,000 number because it's easy to multiply, times a 9.5% residential rate, tax rate. And then I did a sample mill collection, which I think I'm going to change, Aaron, because I do not, this particular example does not have a community college district in it. But we used most of the districts that you'll typically see on your bill. There's also a glossary of terms if you're trying to help people understand more. And then if you go back to this page, that they're separated out here. And then if they really want to get in the weeds, they can get into our property tax book, and you can go by we'll just pick on, and you can go by county. And you can see where like for Sheridan County, how much with the changes that have happened in our property tax code, how much this is going to affect each of the counties. So Sheridan, 75%, you can see their ag, the industrial and commercial. It looks like they don't have much minerals, but one of my favorite ones to highlight is Campbell, since we've been picking on Campbell County and their assessments, because they are the highest assessed county. You can see their assessed valuations 5.7 billion. You can see their mineral total yield. So their residential 7%. So this, the implications of the legislation that's happened and future legislation won't impact them as hard. But then if you go to somewhere like Goshen, where Eastern Wyoming College is, you can see the difference with 35% residential. And they have a little bit, they have lots of different contributors. So there's multicolored, which we like to see as a balanced system. But Director Henson was right. No property taxes, or none of the taxing districts are created equal depending on your mill levies and what services your community decides to ballot on. So hopefully this will provide you guys some information to share out, and I'm more than happy to do a presentation for your local community or point you to more resources as needed.
Thank you for that, Ashley, and Brenda as well. We will make sure we get all of this information out there. I'm going to just quickly ask if there are any more questions, even if I can send them along and put you in touch. I'll include Ashley and Brenda, both your information in our follow-up if that's of interest. But I know the resources from both of you were extremely helpful, especially this last legislative session, helping trustees in the colleges really figure out what's what and what's in front of us when we have just really this barrage of bills to decipher and figure out what's up. So Brenda, I see you have one more comment, and thank you for that.
Erin, if I do apologize, I believe when I was talking about 78% of the mineral value coming from 4 counties, I believe I stated that Carbon was one of those, and that's not correct. It was Sublette, and I just wanted to make sure. So it's Campbell County, Sublette County, Sweetwater County, and Commerce County. 78% of our total assessed value of minerals comes from those counties. So all of the other counties are really dependent on residential. And the only other thing that I wanted to close with is the recognition that we understand, everyone in tax administration understands the increased values related to inflation on all property. But I think sometimes the piece that misses out is that same inflation is impacting every taxing entity's ability to provide services, wages, the cost of maintaining buildings, utilities, postage. It all adds up when you're a taxing authority attempting to provide those services.
You're exactly right, Brenda. And you know, with the resources and these wonderful charts and graphs, sometimes when you see it just in a different way, it really makes these things pop out for us, right? And where the dollars are going. It also makes me think in terms of, for the colleges, what other levers are out there to be pulled if need be, when we're constrained with the amount of mill levies that can be assessed, or how many need to go to the voters. You know, what other options are there out there? And so when we're talking about taking away all property tax and going to sales tax, what does that mean for the community colleges? So it's big conversations. I don't think anyone has the right answers or any of the answers, frankly, and we're really going to have to work through it together. But I appreciate you both, Ashley and Brenda. I know you have a hard stop at 1, so thank you for your time today. It was so beneficial. I'll do what I can to make sure we continue to partner from WACCT's point of view. Trustees, thank you for being here. We're going to make sure these webinars are on the regular. This summer, we've got a really interesting presentation coming from Director Lauren Schoenfeld, highlighting the metrics and the successes of the Wyoming Innovation Partnership. We'll have a walkthrough after the primary election, which we know is so important in our Wyoming for how our legislative elections shape up. And we're going to talk about community college funding and what that looks like. We usually invite the commission to participate in that. Of course, we'll have a preview after the general election and a Craig update in October. And then as we head into the legislative session, what the legislative priorities are going to be looking like. So we're going to be doing this on the regular. Keep an eye out for your calendar. I'm going to get them scheduled out so that you can make sure that you know when they're coming. So everyone, thank you again. We'll send out the recording, the presentations, contact information, all the things that I hope you might need. And if you have any other questions, you can certainly reach out to me. So everyone, have a great day. Thank you.